Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll give you my financial opinions as we go through it. And if you need any help, check out finding-value.com. That's where I go over individual companies, individual sectors, and what I'm doing in my own portfolio. All right, so let's dive in here and see what's going on today. The dollar ripping to the upside with yields. This is going to be a stiff headwind to stocks and maybe even some of the commodities that we watch. Um, we had a pretty good tailwind with lowering yields, but that has reversed. And I know we're looking at the DXY. DXY and yields are pretty much the same thing. We had a big move in the DXY today along with yields. So we look at the 2-year yield. The 2-year yield's up 2%. The 2-year has been on a pretty good track going lower here. That's generally a good tailwind behind gold. And today we were up 2%. We also saw the long end of the curve really take off. 3% higher on TNX, which is the 10-year yield, and that still looks like it wants to go higher. It had gapped up, it looks like, and it was down a little bit. That even the right? No, it's not even on here. The 16th isn't even on here. It's got to be higher than this because we're up at 4.06. It's up here. We're heading higher in TNX. I don't know why it's not showing up on this chart here. And TYX, you can see what we did there. Big move to the upside. We had kind of this squeeze continuation pattern where I think we could go higher in the short term for the 30-year and the 10-year, both of them. So the long end of the curve is going up faster than the short end of the curve. That is known as a bear steepener. Bear steepener, and it only occurs like 10% of the market time. But we had rates go up and the long end go up faster than the short end. So when we look at the TYX TNX ratio, it is moving up. But although this is moving up, you can see that going to the upside, it's due to rates going higher faster on the long end of the curve. So when this generally comes back up, it's from yields going down, and the short end generally goes down faster than the long end. That's the majority of this move. And perhaps that's coming. I don't know with certainty, but right now we've got a yields going up and the long end going up faster than the short end. And I'm sure you guys are like, well, what does that exactly mean? It means that there's future inflation expectations are going up. Some people say it's a strengthening economy. That very well could be a strengthening economy. And then those yields are heading up on the longer end. Bond prices down with the yields higher. I mean, that's pretty much obvious, and we're pulling back there still. And then the 2 and 10 is uninverting, but it's from a bear steepener. And we could get into trouble here. We could get a slowdown, and perhaps that's why oil isn't really taken off. Perhaps people think that there's going to be a slowdown here in the short term. And there very well could be if this continues to go down and we see the 2-year yield drop. A lot of these markets, we see the 2-year dropping before a potential problem. And that's where, this is the 2001 pullback. This is the 2007 pullback. It pulled back in 07 and the big crash was in 08 over here. So we're coming down in yields here, but we were stable today. Gold down $20 an ounce. That does look like we could see further downside, and that would be the mirror image of yields. So the way that yields are priced, if I were to just show you guys, this is kind of a breakout here, this trend going up. And if I were to throw the 10-year yield underneath this, it's basically a mirror image where gold goes up, yields are coming back down, but you can see here, yields have broken that downtrend, and so has gold has broken that uptrend. It's the same thing, just an inverted piece here. Silver down, it's doing what gold's doing. And maybe we do have a pullback left in this if yields continue higher. It still looks good and we're still squeezing up. And then platinum pulling back and palladium pulling back quite good here. Those were all trying to put in a bottom here with yields going down. And the question is, how sustainable are yields going up for the 10-year? Because everything here is just basically priced inversely of yields, unless there's a large fear in the market of a currency failure, which occurred in like the 70s, where we could see yields go past a certain threshold and then people run into gold instead of bonds. XEU to gold ratio, it is selling off a little bit, coming back down, and we are still underneath that big long-term trend line. We've got CRB index that is flat today. Crude oil is down a little bit, but we're flat here on almost kind of like we've got some sort of deal going on, but that's really just an extension of oil. Oil's doing the same thing. It's basically bouncing sideways at the moment. CRB to S&P 500, slight outperformance for commodities, CRB index, but we're towards the bottom end of this flag pattern that we've got. GDX down 4.4%. There we are, coming a little bit below that support line. GDXJ is the same thing, and SILJ, we're pulling back. And that, in my opinion, that's due to yields. Yields moving up. It's been putting a lot of pressure on gold and silver. If the yield curve continues to uninvert and then we see yields dive, I think these will all reverse and go on up. If we continue to have strength in yields, then this is going to be under pressure and we're going to go sideways to lower over time. Crude oil generally does well with yields going up, as this is generally the driver of it. Now, there could be deeper rooted problems in this market that, even though we've got historical relationships, perhaps there's a bond crisis that is going on where crude oil isn't the cause, or inflation isn't the cause of yields going up. It could be supply demand related problems in yields, where yields go up because of the sheer supply of the bonds. And that's where we could see some of these relationships perhaps break apart. Gold, silver, maybe crude oil. Some things could get kind of messy here, and historical relationships start to untether themselves. TTF gas down. We're still heading down below the trend line in TTF gas. We had a monster move back lower, basically to the breakout line almost, of natural gas and Henry Hub. So it's buy the anticipation, sell the event after it occurs. And it looks like we're heading back to 275. XOP, yeah, you know me, it's selling off quite hard here, guys. And we could see further downside. I do think that there could be recessionary fears, the yield curve's uninverting, and maybe we've got more downside here left in XOP and OIH, which are both energy related areas. Let me delete that line there. This is what I'm seeing: shoulder, head, shoulder. But this thing could come down. I mean, we could go all the way back to 98 as a possibility for XOP. And I'm not going to try to time this short term, guys. No way. But we've got momentum to the downside. We've got a bearish engulfing here. That momentum has not reversed from that bearish engulfing. OIH is also selling off. It looks like we are right on support, and we could lose this support and maybe even head further to the downside. That is a possibility in energy service here in the short term. Sprout Physical Uranium Trust, we get a little bit of a selling pressure day to day. Keep in mind, a lot of the times we break out of these things, and sometimes we get a pullback, do a retest move. Are we going to get a retest move here? We'll find out. So this is a bearish engulfing, and in the short term, we could see some selling pressure. URA also getting a little bit of selling pressure today. Is it a reversal candlestick? Kind of not. It could be maybe considered a bearish piercing pattern. It's also no. This could be known as a bloody nose. You get a big green candlestick with a small profit-taking day. But again, we'll monitor it together. We'll see what this looks like over time. We've got URNM slightly lower. It's just a down day. I mean, we could pull back, close the gap, do a retest move from this all-time high. Totally possible. But I'm not betting on it. I'm not going to bet or sell anything. I'm just going to hold on. So even if it does come back here, I think this is a good spot to be looking in that general area of $51, $52 a share if it were to come back. URNJ, we were up 0.82%, but a little bit of momentum lost. But again, guys, I mean, this is a big gap here. I mean, that thing is monstrous. Will that fill? Will we come back and fill that gap? Some people believe so. I'm going to tell you I don't know. I'm not going to sit here and try to pretend like all gaps get filled, but what I'll say is I'm riding this baby and I'm not getting out. TAN's down 4.7%. This is the effect of those yields going up. We could see this continue to go lower until yields, and they really need to start to reverse. COPX down 2.88%. Again, I think this is going to be attributed to yields. I can throw TNX up here, put it on the scale underneath, and you can see when yields started to head lower, we got a base here. We started to come back up. We peaked as yields started to base out and turn. But again, we'll see if that relationship holds, and we'll see how this all looks. Lithium also selling off. Most of this is due to yields. We need the economy to basically get kicked back into gear. And I think yields will do that, but not if they're going up. Not if they're going up. REMX also selling off. This looks like we're losing support here, and we could be seeing a further downside move in rare earth metals. The S&P 500, it is getting a little bit of selling pressure, but we're still up against that resistance for the double top. And is this going to be a double top there? We'll find out here shortly. NASDAQ also moving sideways. Not huge selling pressure days in both the S&P and NASDAQ, but I don't know. I don't like buying stuff that has valuations where this is at. In terms of price to sales, price to earnings, all those things. And this does, to me, look a little bit like a Batman. The Batman has this move, that thing in the middle there. I know some people said, oh, is this a Batman? It doesn't have this. Got to look at patterns, guys. Got to look at patterns. KRE down. We're back to support for the regional banks, and this still looks good to go higher. So we're just doing a full retest there. Given yields, if yields continue higher, these are all going to be under pressure. Emerging markets does not like higher yields and higher dollar. Does not like it. A country, a lot of the times, people will move money around to certain assets based off of currency movements in the market. Now, the question is, is this something where we kind of go sideways here for a little while, and then when that right market condition comes, we rip it, where a slowdown occurs in the market? Very well could be. But right now, stronger yield, stronger dollar. XHB doesn't like that either. Down 0.75%. A little bit of a bearish engulfing here last trading, and we could go lower here in the short term. This, again, it all deals with yields, mortgage rates, affordability. Those interest rates are having an impact on a lot of these different asset classes. MU heading lower, does not like that strong dollar, strong yields. And looks like we've got further downside, and maybe we're coming back to 69 to see if we can retest that support. Copper, surprisingly, is up today, 0.71%, but momentum still to the downside. And I redrew this, and this is probably the likelihood of what we're seeing for a consolidation. We did enter this from the top side down into this consolidation, which means if it's a continuation pattern, we would break to the downside. Iron ore down a little bit, but our projected move upwards all the way to about 220-ish. of a falling wedge. We've got aluminum up a little bit today, 0.46%. We're back to support. Probably what we're seeing is that support level. Baltic Dry Index down 6.85%, and it looks like we are coming back lower. Definitely some good momentum behind that for the Baltic Dry Index. Newcastle coal futures up 0.91%. It's basing out. I think it looks good down here. And again, guys, I play the equities. I don't play the futures pricing. I know some people probably have that question, but your base is here, you break out, and then we're doing a retest, and it's starting to base out above that larger base. Bitcoin up 1.6%, and we're back within the pattern. We got a big, strong selling pressure move, pretty decent candlestick, pretty strong closing. We'll see if this is a continuation, an upside down flag pattern, or if we can actually reverse it here for Bitcoin. And then Ethereum's up 3.27. That looks pretty good. It's smooth sailing here, guys. Consolidation, consolidation, and then we're continuing to move on up at those impulse moves higher. So that looks pretty good. So that's what I've got for today, guys. Give me a thumb up, subscribe to the channel, subscribe to the website if you are interested in learning all this stuff. But yields going up and stronger dollar, it's weighing on a lot of stuff. The question that I think most people should try to answer is, why are yields doing this? You know, why are we moving up the way we are with a bear steepener? We've got the yield curve uninverting. Are we at the end of like an inflationary move where we could potentially be slowing down at some point? Very well could be. I do see evidence in my day-to-day, things I look at. I do see a slowdown. I see layoffs occurring in some of these tech companies. I'm seeing a whole slew of cars trying to be sold right now, and I don't think they're moving. So, yeah, I mean, what I see, what I feel, um, it correlates with the potential slowdown. Now, the question is, how big is the slowdown going to be, and how long will it last? Are we coming out of it? That's what I don't know, but definitely, I think with yields coming on, uninverting, we could see a little bit of a slowdown here. All right, guys, that's what I've got for today. We'll catch you later. This is Finding Value.